If you're a high-earning professional, your time is your most valuable asset. Today, we're talking about the 1-hour investor, the investor that can confidently commit to a property with just 60 minutes of due diligence. This is obviously only possible if you have a specific system in place that allows you to cut time down from your due diligence. And today, we'll discuss our 3-layer approach and how we allow our clients to do this without ever stepping foot in the property. If you're new here, welcome. My name's James. I'm the co-founder and managing director of a property investment consultancy called Frater Property Partners, but this channel is all about your education. If you like the video, don't forget to hit the like button and subscribe to the channel, but let's get into it. Buying a property without seeing it in person first can be terrifying. You'll be worried about structural issues, getting ripped off, and overall market conditions. The solution to this isn't attending hundreds of viewings though. The solution is setting up a system that allows you to confidently invest in property without having to step foot in that property. Over the next 10 minutes or so, I'll take you through the Frater Property Partners 3-layer solution that allows our clients to invest in property without ever stepping foot in that property. Obviously, this is our Frater Property Partners system, but you can take this system and implement it to other places, which means that you can invest in property all over the country without ever having to step foot in these properties. The first layer of the system is the data vetting, essentially looking at the fundamentals of that location. This stage is always done digitally anyway, so whether you're buying a property local to you or on the other side of the country, you're always going to want to do your research online and check out the fundamentals of the location in which you're investing. As I've mentioned in previous videos, the fundamentals include the following: the current job market and future job market as employers are moving to the local area. We're looking for strong transport links, both locally and nationwide, so trains in the local area, but also down to London and across the country. We're also looking for big institutions, so are there big universities in the area, and do these students stay on in the city after they finish their studies? If students are staying on in the local area after they finish their studies, is often a good way to predict future demand for good quality rental properties. What's going on in the local infrastructure? Is there institutional investment going on into the local area, and what does that look like? We're looking for hundreds of millions, if not billions of pounds worth of investment going into that area, improving the infrastructure. This can be either private or government spending. It doesn't really matter where the money's come from, but it does matter what is being spent and how that's improving the local area. All of these factors impact the rental demand for that local area. We want to buy properties in areas of high growth potential, but also areas that are easy to rent out to tenants because demand is high. Arguably though, the most important factor in the current market is affordability of the location in which you're investing. If you're buying a property where the local people can't afford the average home in that area, the chances are demand is going to be low for home buyers, which means price growth is going to be restricted. We've seen that in the southeast in areas like London since 2016. Demand dropped because of affordability, or the lack of affordability, which meant prices slowed, and we're obviously now seeing a slight drop in prices. This first layer ultimately limits our long-term risk and makes sure we're buying in locations primed for long-term growth, but also areas where there's a rental demand. Our clients at Frater Property Partners are only ever presented opportunities in these locations. They need to be in areas where the data is there and we can be confident on the long-term prospects of that overall location. Layer 2 of this system is the physical proof. As a team, we first mitigate our risk by buying good quality assets direct from reliable developers. This is because they come with a 10-year build warranty, but even if you plan on buying on the second-hand market, this stage is essential. The way we provide the physical proof for our clients who can't go to the site in person is we provide a non-glamorous video walkthrough. It's essentially showing the client exactly the property and the details in which they're purchasing without it being from a marketing team that basically make it look really pretty. So if you can't get to the property in person, but you are working to relatively strict timelines, it makes sense to request this to make sure that you're mitigating your risk at every stage. Whether you're buying from a developer or you're buying on the second-hand market, you should be able to get some form of video evidence to make sure that you're buying an asset that you believe in. If you're buying on the second-hand market especially, you need to make sure that this video is comprehensive. It can't just be a marketing video that makes it look like the perfect property. You need to be looking at the specifics, and you need to request this from the estate agent or someone involved in the sale. With the new properties we purchase, we look at two things. We look at completed properties on the same site in which we're purchasing and other sites that have been delivered by the same developer, so we can get a good gauge on the quality of the finish as well as how they work. This is another stage of eliminating asset risk. You get transparency and you actually get to look at the quality of the development or the quality of the properties that you're purchasing. Prior to completion on a new house, you always get snagging done as well, which is where an independent company comes in and delivers a specific report on anything and everything that needs to be done to make the property up to scratch before you rent it out. So that's one more level of security you'll have to make sure the property is up to scratch. And layer 3 is the professional network. If you do plan on securing a property that you haven't gone to see in person, you need to make sure that the partner you're working with is reliable. Whether that's whoever gets the video or anything else, you don't want to risk your own money if you can't trust the people you're working with. So now you're confident on the local area and the property that you want to secure, you need to make sure that all your ducks are in a row before you secure this. This means that before you reserve a property or start to engage in the legal process, you need to have engaged a number of professionals. First is your mortgage broker. You need to speak to them and make sure that you can get lending up to the level in which you need to. For a buy-to-let, this is relatively straightforward because you'll need 25% of the purchase price plus fees and things like that, but they will have to stress test against the expected rental income that property will produce, so it needs to be in an area where the yield is reasonable. The next step, if you haven't already, is to go and speak to a tax accountant. If it's your first investment or you haven't yet invested through a limited company, you'll want to go and speak to this tax accountant to see the most tax efficient way for you to purchase property. If you get this stage wrong, it could cost you thousands of pounds in the future, so make sure you do this early. And if you've only invested in your personal name so far, it might be a conversation to start selling properties or converting properties into your limited company. The third and final partner that you'll want to go and speak to is a local solicitor or a specialist conveyancing solicitor. Essentially, a lot of deals in the current market mean that you need to work to certain deadlines or timeframes, and you need to make sure that you have a reliable partner that can work to these timeframes. To be honest, this is less about the specific deal itself and more about making sure you have a team around you that means that you can work to certain timeframes or you can secure that property as and when you want to or need to. This stage reduces both your legal and your finance risk. The entire deployment process is vetted by a third-party pre-vetted team, and this is the definition of the 1-hour investor solution. This investor isn't lazy. They're often the smartest type of investor. They've delegated hundreds of hours of complex, highly technical work to a proven system. And this system is the cost of entry for fast, safe, remote scaling. If you value your own time and your time is worth £100 or £200 an hour, it's going to make sense to set up the system in a way that works for you so you can move on deals as and when you need to. You don't want the speed to mean that you take on unnecessary risks, but you want to be able to move quickly as and when you may need to. We've spent years building the system to allow our clients to invest in property from all over the world. Although most of our clients are UK based, a lot of those people are investing in areas that aren't local to them because they want the best returns, and this often isn't your backyard. If this sounds like you and you're keen for a chat with one of the team, I'll put a link to our website, Frater Property Partners, in the description. But I hope you found the system useful. In my opinion, it is slightly better if you're buying directly from a developer rather than on the secondary market, but you can utilise this on the secondary market as well. So I hope you found it useful, and I'll see you soon.